COP26 has been a big focus for our work at the Impact Investing Institute over the last year, and it will continue to be over the next 12 months, particularly around the development of a Green Plus sovereign bond proposal. It's been one of the most exciting pieces of our work because of the degree of engagement we've had with investors and with the UK government on it. We were therefore obviously delighted when early this month, Rishi Sunak, the UK Chancellor, announced that the UK would issue the first in a series of green sovereign bonds in time for its hosting of COP26 next November. The Green Plus sovereign bond work also modelled our preferred way of working at the Institute, which is in collaboration. We worked with the Green Finance Institute, which was set up just before us and is also backed by government and by the City of London Corporation, and with the Grantham Research Institute at the London School of Economics. And Professor Nick Robbins at the LSE has done very important work describing the just transition, the idea that the transition to a net zero carbon economy must be made taking into account the impact that this transition has on people and communities, both mitigating negative consequences, but also taking advantage of the many opportunities which this transition brings, particularly around green skills and the creation of sustainable jobs. So we designed our proposal for a Green Plus gilt in the UK, combining social and environmental impacts using the framing of a just transition. And that means that for each environmental project category for use of proceeds, there was a clearly defined social co-benefit. And we are confident that the Green Gilt, which the UK government has announced, will have significant social impact through supporting the green recovery and creating sustainable jobs across the country. And the commitment to a series of issuances provides future opportunities for a full Green Plus gilt, and we're keen to help the government implement this in any way we can. The link to our proposal, which is on our website, is going to be dropped in the chat for those of you who want to have a closer look. And in the meantime, I'm very pleased to have the opportunity today to discuss this work and the concept of Green Plus sovereign bonds with a great panel. Welcome panellists. Isabelle Laurent is Deputy Treasurer and Head of Funding at the European Bank for Reconstruction and Development. She oversees EBRD's issuance in the capital markets and investor relations, and also focuses on capital markets development and sustainable finance. Rishi Madlani is Head of Sustainable Finance and Just Transition at NatWest, the UK High Street Bank, and the bank has funded and financed about £10 billion of climate and sustainable finance activities in the last 2 years. And Rishi is also a councillor on Camden Council and chairs Camden's Pension Committee. Karim Arslan is the director at the Green Finance Institute, and he worked with us on the Green Plus Gilt proposal, which we presented to the UK government in September. Before joining the GFI, he spent 10 years working in investment banking and life insurance. Lovely to have you with us today. Thank you for joining us. Isabelle, I'm turning to you first. Why do you think it's important for the UK and indeed other governments to issue green or Green Plus sovereign bonds?
Thank you so much, Sarah. Well, I think it's so important in underlining and reinforcing the government's intent to transition the UK to a resilient net zero economy. I think, it identifies projects, infrastructure projects and others that will ensure that we build back better. And I think this Green Plus selection that you've introduced is, again, very important in ensuring that all the green projects that are selected for the use of proceeds have meaningful social co-benefits. So it's a different lens from the do no significant harm that we see in the EU taxonomy, with this very significant focus on the social co-benefits. And I think it's just an important signal that the government wants to ensure that it's an inclusive and just transition. I also think it will be a great boost for the sterling green bond market, which is embryonic. It's significantly behind dollars and euro, which one might expect, but I think it's even behind that for Scandinavian currencies. And I think that it will be an important catalyst for many other issuers, be they corporates, utilities, local governments, to identify their own potential green projects that can be funded through the green bond market. So it's a hugely welcome signal.
And just picking up on that point about the sort of catalyst effect, I mean, why is it that when a sovereign issues a green or labelled bond, it seems to stimulate the domestic market so much? I mean, we saw in Ireland and in Belgium, when they'd issued their own green sovereigns, you saw a real surge in domestic issuance by corporates and local authorities. Why is that?
I think it's the sense of what is possible, how things are to be done. So it takes a lot more work now than it did in 2010 when we started issuing green bonds to try and work on the communication internal and external with investors. What is it that they're looking for? How do we report? How do we communicate even internally what our targets are, where we're trying to get to? But I think that that's a dialogue that many issuers are going to have anyway, but it accelerates it. And I think that in highlighting that the government is undertaking that, it starts to help people think about what they would need to do the same and what they may get as a benefit from doing it. I think, as Mark Carney mentioned, there isn't necessarily a benefit in terms of the finance level at which you get. I mean, that tends to be slightly different for more investment grade, just investment grade or sub-investment grade issuers, where they can actually attract a much bigger universe of investors into their bonds than they would for their normal bonds. And that may give them a beneficial financial aspect to it, but there isn't that. So a lot of people sit on the sidelines, but actually the engagement is going to happen even when you're issuing ordinary bonds. So trying to work on that kind of plan and seeing that the government itself is able to do it, I think is very important in just motivating people to identify for themselves what projects they could finance through green, social or sustainability bonds.
And Karim, Isabelle touched there on some of the issues that we've been discussing over the last few months with investors and with governments. And we know that there were certain challenges to overcome for the UK government before it felt it was able to commit to issuing a green sovereign bond. Can you talk us through some of the conversations that we've been having over the last few months, what those challenges were and why you feel they can be overcome?
Sure. Thank you, Sarah. And I'm delighted to be part of the discussion today and to celebrate the Impact Investing Institute first year anniversary with my fellow panelists. As you said, I think we've engaged on a lot of different topics. The objections and concerns of the Debt Management Office and Treasury were public and well known. They were around the issues of the value for money for green gilts, concerns around additionality, hypothecation, but also the need for a business case. And Isabelle touched on some potential points around catalyst effect, investor diversification and pricing. And we tackled these head on by quoting precedent in other sovereign green bond issuances, but also looking, as you mentioned, Sarah, at investor insights. On the additionality point that was kind of discussed at length. So additionality is a way for investor to indicate and to see a transaction as being robust. And we talked to investors and through market precedents, looked at some best practices in the market that could alleviate some of the government's concerns. For example, refinancing of project is acceptable, but with a certain look-back period. I think 2 years is what the market thinks is acceptable look-back period for refinancing projects. And this is in line with green bond principles. Also, market participants are comfortable with a mix of both refinancing and financing of new projects. And also that the green bond framework should, or the green gilt should be financing clear manifesto commitment and should be used as an additional incentive to deliver them. Obviously, I'd like to build on Isabelle's point around the catalytic effect within governments, the pure additionality of improving awareness around sustainability and building metrics to measure impact of this issuance. And I said we've looked at precedents, the French Green OAT combines a mix of financing and refinancing is a good example, or the green bond in the Netherlands. And both issuances were very well received by the market and well oversubscribed. Another issue that I think it's important to talk about is hypothecation. The question is, within government, it's too restrictive. Is hypothecation needed? And I think what we've seen from best practices in the market and discussions with the market, that it's not a necessary requirement in issuing a sovereign gilt, and that the issuer would need to document a scheduled project with a notional equivalence that the proceeds of the green gilt could fund. Quoting precedents again, France Green OAT and Germany had their green gilt kind of pooled within their general budget, but identify equivalent amounts within their green agenda to be financed by the green gilt. And obviously, the value for money or a business case, I think I'm not going to talk about it more, because Isabelle mentioned obviously that the investor diversification, some potential, the dynamic of pricing that could lead to potential pricing benefits and cheaper cost of funding for public finances, and the catalytic effect on corporate and municipal issuances.
Yes, thanks, Karim. I mean, Karim was very involved in all the work we did testing our proposal with investors, and indeed over 40 asset owners, asset managers, and sort of relevant organisations publicly supported our proposal for a Green Plus gilt. And I think, Rishi, one of the things that we found most encouraging really is that there was really genuine appetite in the market for that combination of environmental benefits but with social co-benefits. And I think, I mean, to be honest, Karim, I think we were a bit surprised by even what you might call the pure green investors really feeling that their mandates and their that they were able to incorporate those social co-benefits within their investments. Do you get the sense that this is the way the market is going? Is this the momentum behind the market, and how will those environmental and social be combined in future?
Thanks for the question, Sarah, and again, happy birthday to the Impact Investment Institute. Actually thinking around where we are in the period as we emerge, hopefully, from lockdown 2.0, the impact and social has been on the agendas and minds of financial services sectors in a way that it's never been before. So I think the importance of the II has never been more key. So helpfully, my analysts actually produced a new note yesterday, actually, that measured the green, social and sustainable bond market issuance, which indicated there have been $416 billion of issuance year to date in 2020, over 60% increase on 2019 levels. And of that, green accounted for was an 11% increase versus full year levels. Our macro team sort of anticipate this penciling in another 60% of growth for 2021, based on what they're hearing from investors, and their recent investor survey showed that over 50% of investors said that their interest in green bonds would grow next year, and a further 20% saying they wanted specifically green bond classifications. Hopefully what's happened across the Atlantic will help drive some of that as well in the US markets, which will also then help. And so back to your point about the intersection of green and social, it's a joke I make when I'm going around the bank. I used to have a slide at the beginning of my packs saying, is climate change real? That slide's now either in the appendix or thankfully in the bin, because it's no longer required to have that argument. And actually an argument on just transition and how we start measuring what are the social impacts of climate and be more aware of this. And we had our first experience when NatWest issued its first ICMA certified social bond last year. And it was fascinating going around in that process, firstly forming how we did our own social bond, but actually speaking to investors around this, where there was such demand across Scandinavia. I long for face-to-face investor meetings again. It will be a while before we're back to those. But actually, what I was so shocked by was how nascent some of this was. There wasn't a UK-wide debt deprivation index. We had to create one, and thankfully my economists helped us create something robust. And there wasn't a job creation measure. And these are things that we know that our first social bond isn't perfect. It's a start to measuring the impact of the jobs we create through lending to SMEs and deprived areas. But there's so much more work on this to happen. The green bond market has had that thought, and Isabelle and leaders like that who have really driven this agenda that helped make the green bond more vanilla and more boring, because actually more boring means it's more we're going to have more investors and more issuers. it's a good thing. Sometimes it's not. Sometimes it's good to be more boring. But I think the potential for this, and we saw earlier this year some of the local authorities, West Berkshire and Warrington, issue municipal green bonds. I think the power and potential of a UK Green Plus Gilt to really stimulate the UK and help us build up better the levelling up agenda that Isabelle also referred to is huge. And I hope that this is seized.
Thank you very much. I mean, it's obviously great that the UK is committed to doing this in time for COP26 next year. Do you think that do you think it's important for the UK to develop its credentials and show global leadership in sustainable finance? And if so, why?
100%, Sarah. If I'm honest, I was delighted last week that we were announced one of the lead sponsors for COP26 and the principal banking sponsor adanside a number of our customers, SSE, Scottish Power, National Grid. And what I was really pleased by was it was a rigorous exercise. So the COP unit we had to jump over a number of hurdles that involved a lot of work, which is good. And that reassures me that it's going to be a credible process. But the UK has historically played a key role in climate, both through our sort of Semitic Climate Change Act in 2008. I'm delighted to have now Nick Stern as one of our advisors in the bank, who's for the geeks amongst us, the economics of climate change, was one of those reports that actually helped shape some of the global activity on this. And we've historically done a lot of this through Europe, and I worry that we need to make sure we really use our opportunity of leadership through COP, and I'm speaking about the UK government here, to really bring this to focus and to mind. Great news coming across the Atlantic, hopefully, but that takes us back to where we were 4 years ago with the US rejoining the Paris Agreement. But this COP is going to be crucial. And I think we need to make sure we start getting this right. So, things like missteps of the government of not having any women in the negotiation team, that was just dreadful. And what will need to happen in COP is making sure we can take that, not just a negotiation perspective, but actually a leadership perspective. And this year, the next 12 months are so critical on this because the world's eyes will be on us. So our Green Plus Gilt is a key part of that. And yes, it's a bit late, but and it will take time to do. And Isabelle and my assurance team also testified to how much work goes into issuing one of these. I'm glad that the decision's been made now, and it's part of that showing leadership.
I mean, I certainly also think, when I was a journalist, the last few years were about Brexit, and Brexit, of course, because of the pandemic, has moved down the agenda. But, we are facing our financial services industry is facing a very uncertain future post-Brexit. And I think, this is a real area where the city can have, there is already deep expertise in the city, but this is really, something that the city can be offering. It can be part of the sort of competitive offering to the rest of the world. Karim, we tested our proposal for the Green Plus Gilt with market participants, particularly fixed income market participants, obviously. Can you talk to us a bit about how that process worked and why it was important? Certainly.
Yes, as you mentioned, we engaged with the engagement of the markets was essential part of our work as a soundboard, but also to identify best practices. As you mentioned, we've organized the thinking with major market participants, fixed income specialists, asset managers, asset owners, and bank treasuries. And I think initially at this meeting present, these fixed income specialists manage assets of around £3 trillion. So they kind of had good understanding as well of the green bond space. And the purpose was obviously to canvass the market for appetite for a green plus and green sovereign issuance, but also to discuss some of the structural features of a Green Plus Gilt. And mainly also to help us provide feedback to the government on these specific structural concerns that they've raised around, that I mentioned earlier, additionality, hypothecation, and what is actually accepted by the market. The question of, is high hypothecation essential or not? It was a great opportunity to test with the market if such features, what are the best practices to design them? And as I mentioned also, and I said, it's get a view of what the demand is. And the feedback we got is there's an overwhelming demand for the UK to show leadership in this space and to issue a green gilt. And I think with our engagement with government, that was an essential part of the discussion. This this debate that we've had with the financial sector. And also we've got a lot of best practices and highlights on these that we were able to share with government.
I think also, I mean, one of the things that we recognise in all our work at the Institute is that there's massive appetite from individuals and in investors in general for sustainable finance vehicles. And there's actually not enough sustainable finance vehicles to meet the demand, which is a positive thing. And I mean, 16 countries have now issued green sovereign bonds worldwide. And we're planning to expand our proposal to other markets, including the EU and emerging markets. And we're also working on developing better social metrics and the methodology to apply a social lens to green investment. Because I think, harking back to what Rishi was saying, I think that we were quite, I mean, there are lots of initiatives going on worldwide, but you need to bring these initiatives together and really help investors think through how to define the social metrics with the environmental benefits. And that, in fact, one of the questions that's come up in the Q&A is asking us specifically about that. So I'm going to want to come to the great questions that are coming in, but before we do that, just a sort of sense of the future from our panelists, what you see happening next. I mean, Mark Carney gave a very clear vision of companies, businesses and investors increasing responsibilities around, particularly in reporting on their climate responsibilities. But how do you see this particularly the bond market developing to respond to those changes? Should I come to Isabelle first?
Well, I think the bond market is increasingly focused on having the communication tools. So you were talking about metrics and the other. I mean, in most discussions that we have with our investors, we are now focusing on ESG, what we're doing, what our commitments are, how we approach different things. It doesn't mean that we've got it all perfectly. And I think that's a sort of general push in the market. So putting out more information. So I'm currently working on our GRI second reporting of metrics that are deemed meaningful by the market. And again, what's really important is that we are able to differentiate between sectors. So I think at the moment, the way ESG is done, it puts out a lot of information, but it's really hard to see the wood from the trees. So working out what's material in individual sectors and geographies is going to be very important. And I think that's something that the market is doing or needs to do more of, rather than this sort of blanket notion that we just put out lots and lots of different things and we can't really see what there's there. We've embarked on TCFD reporting, and as Mark Carney was mentioning, that's obviously now a commitment for all in the UK, and I think that we're all going to get better at it. It's very hard in your first report to do it perfectly, but we're all incrementally getting better at those things. So I think just the communication tool, and as I mentioned, it's not just going to be for green bond issuers or social bond issuers, it's going to be for the markets to communicate those things, not neglecting the fact that there are parts of the market that are very important that are neither green nor brown. And, so it's not as though that's the only lens that we need to see everything through, but we have to be able to assess within our organizations, even if we're not doing something that is either positive green or negative brown, actually where the risks come and being able to articulate those better. So I think that is what the market is getting better at. And I think the tools for reporting and working on aggregation of tools, whether that's through stock exchanges, whether that's through different platforms that come, that's another important thing, because at the moment we're each doing it in our individual way. And it makes it much harder for funds to aggregate what the impact is of their fund and then report to their own constituents, which again is going to be a very important part. Part of that is getting metrics that generally people use transparency over baselines and benchmarks that they use, but also the tools for aggregation so that it's easier for them to take reports and also tease out, so rework the numbers that you produce on your greenhouse gas savings or something else, so that they can look at the underlying assumptions and make them more uniform. Do you use a local grid, a national grid, a regional grid, something else, you know, for the projects? All of that they will then be able to play with. So I think these are all the different sort of tools that we're inching towards and making great strides, but it does take time to get there. But I think those are the big changes we're seeing.
I think it does take time, but I think, you know, one of the things that's been amazing about the last year is seeing how quickly momentum is picking up. I mean, there was momentum before the pandemic, but I think that, you know, the pandemic has in many ways sort of heightened our sense of urgency around these issues. Karim, I'm going to come to you next, and I'm going to combine the question with some of the great questions that are coming into the Q&A so that we've got time to address those. I mean, it speaks to some of the points that you were covering earlier. Martin Pike asks, given the huge level of government borrowing, how can we be sure that the green bond will indeed be additive to the transition rather than just labelling of projects that would otherwise have been done anyway?
Thanks, Sarah. Yeah, certainly, that's the kind of, it relates to the point I made earlier about how we demonstrate additionality in the green bond. And I think under the green bond framework and the principles there is an extent where there are some refinancing of projects that is accepted, but to give confidence to the market, a green bond should be additive by having allocation of finances to new projects that are within the manifesto and that would need financing. And issuing a green bond, knowing the need for borrowing that is needed in the coming months or years, is something that could help achieve this and push it forward. And again, to the point that Isabelle made, and I think I mentioned as well, is the additionality within government to identify and report impact and create awareness around these environmental goals internally, which is hugely additive within government. And I think it would add to the green debate centrally.
Thank you. Another great question from someone who hasn't given their name, but which Rishi comes back to the point that you were making about the social impact measures and the risk that they may be superficial. This person asks, Rishi mentioned employment in areas of high social deprivation. However, often the reality is jobs created are not employing local people and they're pushed out of the area when regeneration takes place. Therefore, social issues are not tackled and they're just moved along. I think that's it's an incredibly important point. And I mean, we're at a relatively early stage of really thinking through the accountability on the social impact delivery, aren't we? But Rishi, what are your thoughts on that?
Yeah, and it's a really, really good question. And it's something that sort of it's something we debate and regularly think about internally. We've made huge progress on the E of ESG, and I actually say the climate part of ESG, because we've not made as much progress on biodiversity. And on S, we really have not made, and we all put our hands up, and that's why, for me, our first social bond issuance, for example, was an experiment, was learning. And we, having that conversation with investors, getting that feedback from investors to see what they want. Investors also don't know what they want yet, which is interesting because they've all got different thoughts and processes on this. So I think when the EU Sustainable Finance Action Plan's first white paper or green paper was first launched, it was meant to be an overarching piece. And you've seen the European Commission make huge progress on the green taxonomy, and you've seen now UK government announce that our own version will be following. In the same time, the social work, the work on social, not social work, hasn't really been accelerating in that process. Now, I've seen pockets of this work happening. I'm seeing lots of different definitions emerging, and there isn't one real standard. But these are precisely the sort of issues, because actually, how do we judge those jobs? So creating jobs in itself isn't good if they're precarious or terrible jobs, unsafe jobs, or these are absolutely the issues. And we don't even have. I think we start by measuring and start by factoring and counting what we can measure, and then we start to improve that. We're going to start to improve those metrics. But I think there's a huge body of work. But fortunately, I say that my reason for optimism, and I'm always glass half full person, is that, you know, COVID has actually forced us to think about social in a whole new mindset paradigm of thought. You know, I would not have seen financial sector services institutions respond to a social crisis in this way. And I've been proud of our response, whether it's 10 billion of loans to companies or 330,000 calls to customers on welfare. Did I think we'd be doing that before? Perhaps not. Perhaps not. And it's been really pleasing to see.
And there's another great question building on some of the issues you were addressing there, Rishi, which is another anonymous attendee, some big online retail companies that do door-to-door deliveries have admirable plans for carbon neutrality, electric vans, wind turbines. Does Green Plus mean that they will also need to be focused on being better employers with good employment terms and conditions, living wage, etc.? It's increasingly important to ensure that workers are protected as technology marches on with increasing speed. Isabelle, any thoughts on that?
Well, I think that that's part of the ESG that is a separate aspect. So there's the screening of the issuer, which is not just about what they're doing, but externally, but what they do internally. So when you look at most ESG analysis, it indeed focuses very significantly on governance, on policies for their workforce, on training for their workforce, on benefits for their workforce. So it's not just an external looking thing. Are they doing socially important projects, but actually how they operate internally. And that's probably more of the ESG analysis. In terms of the sort of green and social bonds, and I saw that there was another question about, aren't green bonds already, don't they already have social credentials baked in? And it sort of gets to the same thing. I think my observation is that a lot of green funds were set up, and a lot of people then said, we need green impacts, and we need you to talk about the green impacts. And I've been co-chairing the impact reporting working group of the green bond principles now for a few years, where we try and come up with project impacts for different types of projects, irrespective of the geography. And what we found when we were initially doing things like water and wastewater, when I said not just looking at cubic metrics of water saved, but actually looking at access to clean water, people would say, oh no, you can't include access to clean water, that's a social metric. And we're focusing on environmental. So it was almost as though never the twain shall meet. And the same with wastewater. And I kept saying, but you know, if I don't have access to wastewater treatment, and I'm just dumping my raw sewage in the river, is that a green problem, or is that a social problem? You know, I mean, these things are wholly intertwined. And to my mind, as the questioner says, all social projects, all green projects are social, not all social projects are green. But teasing out what those impacts are, looking at what the co-benefits are and reporting on them actually is very important. So we've been allowed to include some social impacts, but often then less impact than more output or outcome, because I don't think yet we've got all the ability to really tease out what the true impact is, social impact longer term. But it's certainly a good start in articulating that and having funds who are able to focus on both and not exclusionary, which we saw quite a lot of. There were either green or there were very few that were pure social. I'm hoping COVID will change that, and I'm hoping the Green Plus Guild will make the language of Green Plus Social very much more current.
Thank you, Isabelle. There are loads of great questions, and we will try to come to some of them after the event, come back to specific questions and questioners. I'm going to turn to the last one, because I think that's very relevant for the proposal that the Institute put forward and really for next steps. It's from Elma Tabari, who says, partnership in defining social outcome objectives, partnership between public and private sectors is essential. And I think that also references an earlier questioner who asked, is there a link, should there be a link with community development finance initiatives or institutions, which I think is very relevant in terms of linking, you know, social is local and needs to be driven by local and community needs. What Elmet asks, what can the government do to work better with the investment industry? Rishi, can I turn that over to you?
Yeah, so I mean, I think there's got to be a couple of things on this. So hard to give a succinct answer on this. I think firstly, people being more aware of their pensions and whether it's the work that Share Action and people make. We need more financial awareness, and the Make My Money Matter campaigns and pieces like this are so critical. Of Good Money Week run by UCSIF. We need these organisations to make people more conscious consumers of this. I also think, I mean, actually, the Just Transition work provides a really good framework for this. You've got the inclusivity, the creativity of jobs, you've got sector-based and you've got place-based. And actually the answers for this are really, really different in each area. And that work needs to go on. So when you look at the Scottish Just Transition Commission, or you look at the work that's happening on some of the Northern mayors or Sadiq and Shirley Rodriguez in London, there needs to be more place-based solutions. So, and the way that will work is by bringing together politicians, business and finance and people. You need the voices, whether it's school striking, kids aren't striking school right now, but that will be back hopefully once the vaccine is out. And we need to bring those together. How do we have those voices in the same place to create policy that works for sectors, works for regions and is inclusive at its core?
Thank you, Rishi. And Karim, can I turn that question to you as well? And also thinking about just bringing in some of the work that the Green Finance Institute and the Impact Investing Institute with the LSE are planning for our next steps. Certainly.
And also coming back on the points that Isabelle raised about green and social and how intertwined these are. And specifically, you know, this year we've seen a huge surge of social bonds, and the interest in social has become so big that when we designed the proposal of a Green Plus, with the market there's enough latitude under the green bond banner to report and the impact on social. And it goes back to the point that all green projects have a social angle to them. And I think next steps and what we should be doing, to a point you mentioned, Sarah, is, you know, what are these metrics and how we report on them, but also how do we. There are some frameworks of what these metrics should be and how they are, but they differ from every local jurisdiction to the other. And how can we work with government and investor to look at what sort of social metrics should be included and how we make sure they're streamlined and standardized, so that such reporting on the environmental that is more streamlined today and the social is easier. And I think that's pretty important as next steps to be able to deliver on some of these impacts of the environment, and also deliver on some of the impact of a green recovery that we've been talking about.
Thank you very much. And thank you to all the three panelists for what I found a very interesting discussion, and I hope our audience has too. It's been great working with such a fantastic group of people, all three of you and others on the Green Plus Gilt work, and we're very much looking forward to next steps. I hope you, the audience, found it as interesting as I did, and we will be coming back, as I said, to questions and points raised in this discussion in our follow-ups.